Welcome to this Premier Training revision video that looks at the Receivables Ledger Control account. The Receivables Ledger Control account is a summary in the general ledger of all the transactions entered in the separate customer accounts. It shows how much is owed to a business by all of its customers. But what goes where? Anything owed to a business is considered to be an asset, which will be shown on the debit side of an account. Therefore, anything that increases what is owed to a business will be a debit, and anything that decreases what is owed will be a credit. Let's see how this helps. First, let's consider the balance brought down. Receivables owe money to a business. Any balance on the account must therefore be a debit balance. An overall credit balance here would mean that the business owes its customers money, which would be a very rare occurrence indeed. Therefore, we can assume that any opening balance or balance brought down will be a debit. Next, let's consider customer invoices. The debit side of the account is used where there is an increase in the amount owed to the business. Therefore, the total of all customer invoices will be added together and again recorded on the debit side of the account. What about any payments received? When customers make payments, it reduces what is owed to the business, and so the payments will be added together and the total will be shown on the credit side of the account. Next, let's consider credit notes that are issued. If customers have to return goods because they're faulty, the business will issue a credit note. This will reduce what the customers owe, and so they're added together with the total entered as a credit. Now, discounts allowed. The business may offer its customers a prompt payment discount, and if the customer pays early, it will allow them to reduce what they owe. And we've seen that anything which reduces what customers owe will appear on the credit side of the account. And what about irrecoverable debt? Occasionally, customers don't pay. The customer may have gone out of business, or there's a dispute over a payment. While the business will make every attempt to recover these amounts, there will come a time when all recovery methods have been exhausted. The debt will then become an irrecoverable debt, and the business will have to accept that they will never recover the amount, and so reluctantly accept that the money owed by customers will be reduced. Therefore, an irrecoverable debt will show as a credit. Next is returned checks. Some customers will pay by cheque, and inevitably there'll be some checks which are returned by the bank. They've bounced because there are insufficient funds in the customer's bank to honour the cheque. And this will mean the customer will have to pay again, and it will increase what is owed to the business. Finally, there may be occasions where a customer is also a supplier, and there will be amounts which are owed to the business and amounts which are due from the business. And the business may agree to set off one amount against the other, and this is called a contra. And if we agree to reduce what the customer owes, it will be a credit entry. Remember that a control account, such as this, records just a summary of activity over a period of time specified by the business. The separate day-to-day transactions are recorded in the individual customer accounts. But nevertheless, the items to enter as a debit and the items to enter as a credit will be exactly the same. I hope you found this video helpful, and thanks for watching.